The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 9:06 a.m. Friday morning. We got 24 minutes to go until the start of trading. Quite a week to the upside it's been so far. Reclaiming, talk about all the losses that we had from last Friday's sell-off. Zooming in on the action, you back it up to a week ago, June 18th. I'm going to pull it up on, that was the NASDAQ. Let's check it out on the S&P real quick. S&P futures last Friday, we trade down to 41.40. Sunday night, you actually got a print of 41.26. And how about 140 S&P points from that price point? Upward territory in a big way. We're talking about record highs in the S&P this morning, trading at 42.64, up about 8 points. NASDAQ 100, relentless to the upside as well. Right now, you're positive by 20 points, 14,373. Actually made it to 14,422 yesterday, so just off those highs. The Dow catching quite a bid today. Nike accelerating higher. Nike putting a big bid into the Dow. We'll jump over to Nike in a moment. You got the Dow right now up 170 points. That's about 0.5%. Trading at 34,252. Why not? We'll jump over to Nike real quick so you can see the chart. That is the chart as of last night, folks. But guess what? This morning, we're going to open at 152. That's right. You're talking about above everything that we have on this chart. Check out the acceleration on Nike last night with their earnings. So there's the bid. You're talking about $20. You're talking about almost 15%. Nike is going to trade up overnight on their numbers. We'll jump into those in a moment, but Nike, a Dow component, so that putting a big bid in the Dow, which is why you have the Dow up about 0.5% right now. You got the NASDAQ up 0.1%. You got the S&P's up 0.2%. You got the Russell up almost 0.3% right now. Jumping around to Bitcoin, a little bit of volatility in the overnight session as usual. We made it up to above 35,500. At about 10 o'clock last night, the high actually 35,635. Since then, we've lost about $2,400. Bitcoin sliding to 33,295. Always interesting to see what happens with Bitcoin. The trading does not stop on the weekend for cryptos. You got crude holding relatively well above $73 at $73.37 this morning. You got the gold contract catching a little bit of a bid, up about $12, up near the upper boundary line, maybe where it's been trading this week at $17.89. Silver's up 29 cents, $26.38. And we'll jump to notes and bonds. We got some inflationary data this morning. As you will jump to that next, but the 10-year pretty calm. You see a little bit of a tick upwards. You're talking about a yield right now of 1.48% on that 10-year. Comfortable just under 1.5%. All right, let's jump over to the economic data of the morning. One of the biggest indicators that the Fed watches for inflationary data. Talking about personal consumption expenditure price index, important inflationary gauge for policymakers, rose 3.4% from a year ago, pretty much in line with estimates, which is what you want to keep track of. Don't be entertained or don't be focused on these types of comparisons, folks. Biggest increase since 92. We all know that there's just forces at work right now that are creating records across the board. Consumer spending was flat for the month, missing expectations. Personal income declined 2%, less than the market was looking for, a 2.7% drop in that number. So you have the inflationary data, personal consumption expenditure index, 3.4% in May, fastest rise since 1990s. The core index rose 0.5% for the month, actually below the 0.6% estimate. The market will love if we start missing estimates in terms of what type of inflationary data that we'll be looking at. Fed officials continue to insist they see the current situation as temporary, as we all know, including volatile food and energy prices. The PCE index rose 3.9% for the year and 0.4% for the month. The headline increase, the biggest since August of 2008, just before the worst financial crisis hit, etc. As we know, a separate part of Thursday's report showed that consumer spending was flat for the month versus an estimate of 0.4% increase. Personal income declined 2.7%, as I said. Market was looking for a decline to Personal income declined 2%. Market was looking for a decline to 2.7%. Those numbers also have been distorted primarily by government stimulus checks. As we all know, a lot of weird stuff, a lot of different variables coming into play here. Personal savings rate, 12.4%, declined from April's 14.5%. The market takes that, though, and it takes it in stride, folks. Actually accelerates a little bit to the upside. There's your 830 volatility on that number. We were trading at about 42.58. So the market likened that the inflationary data, when you look at it here, actually a miss in terms of what the market could have been looking for. Core index 0.5% for the month, below 0.6% estimate. Market has to like missing the estimates. Don't get too focused on all of these numbers that you're going to see. You're going to see biggest number since 2008, right? You're going to see fastest increase since the 1990s. It's just not fair, folks. The comps that are being considered here, anytime I see an analyst going on, whether it's Bloomberg, CNBC, and they're talking about comps versus a year ago, they're talking about revenue growth versus a year ago, they're talking about profits versus a year ago. Whenever I hear somebody talk about the percentage growth of profits versus a year ago, my brain just turns off. And I say, what is this person talking about? So many companies were making no money last year for obvious reasons. The world was shut down, let alone just the U.S. And this year, we got rampant savings, right? We have stimulus. We have the economy open back up. We have all this pent-up demand. It's just not a fair comparison. Usually, you want to follow comps so you can make an educated guess as to what the future will look like. The comps versus a year ago provide nothing in terms of what it will look like a year in advance. So all of this is tantalizing, it's entertaining, it's amusing, it's remarkable, some of the numbers that we have from a year ago, but it does you no good in terms of trying to interpret where we'll be a year from now when you compare it to a year earlier. Okay, so we're going to see some funky stuff going on, which is why we continually see record-breaking numbers. I mean, it's been record-breaking across the board, folks, whether it's initial weekly jobless claims pushing 6 million during the pandemic. Okay, it's tough to remember that we never had a number. All right, we got initial jobless claims yesterday at about 411,000. Prior to COVID, I think the record for an initial weekly jobless claims number was like 672,000. Well, we were pushing 6 million during the pandemic, okay? A lot of weird stuff happening, a lot of records, because we've never seen anything like this in our lifetime. When you compare it to a year ago, they're going to be staggering numbers. But what you want to pay attention to is what is the expectation the market's looking for. And the market probably pretty happy with the number when you look at the core index rising 0.5%, actually below the 0.6% estimate that they were looking for. And when you include volatile food and energy prices, 0.4% for the month, okay? So not too staggering in terms of where you are there, in terms of what the market may have been looking for. But nonetheless, we creep higher across the board with the S&Ps right now going to be pushing all-time highs on the open, trading at 42.64. All right, jumping around to some of the biggest stocks out there with earnings last night. We were waiting for Nike. We were waiting for FedEx. We got a winner and we got a loser. We'll start it off with Nike, and boy, they are the winner, as I mentioned. We'll pull up the numbers after the break, but Nike, we're trading almost $20 to the upside. What is it right now? It's exactly about $16, $16.41 to be exact. We're trading higher. So what is that pushing? Maybe 11, 12%, something like that. Remarkable, though, and it's going to be an all-time high for Nike. And, man, when we get into it, their digital sales are rocking, folks. I think it's 73% digital sales, direct-to-consumer growth. Remarkable for Nike. On the flip side of that, FedEx, not so much. We'll see how we react on the open, okay? As we've seen before, the move overnight, not always reflective of when true supply and demand start coming into the market at 9:30, but FedEx is down about $10 on their numbers last night. 220. Pretty decent numbers for FedEx. Their cost rise and putting profit may be in question. Pull up CarMax, trading higher this morning on their earnings as well. We'll be right back, folks.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee, TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We get the market in positive territory to kick things off. Quite a week for the markets overall. Quite a night for Nike shaping up as we get Nike trading up about $16 in the overnight session. You're going to be opening at all-time highs on Nike. That's going to put a bid in the Dow, which is why they get the Dow rocking up 160 points right now. Pretty remarkable when you look at the Dow, right? We started the week off, folks, at 32,902. How about 1,300 points in the Dow right now? You're now within about 750 points of the all-time highs on the Dow. And checking out where we are. So jump back to Nike. NKE is their symbol. You see the trade higher, getting into the numbers. Earnings and sales fueled by record revenue in its largest market, North America. Crushed it in North America. Digital sales up 41% compared with the prior year and rose 147% compared with the same period in 2019. There's a comp I like. And you know, digital sales versus the prior year, that actually might be a comp that mattered because, you know, as stores were shutting down, as malls were shutting down, maybe Nike was able to accelerate some of their digital sales during the pandemic. Still, they're growing 41% during a year ago. They saw a boost in its wholesale business, something largely inactive, of course, during the year earlier, during the pandemic. Also offered better than expected sales outlook. Gotta love all of that combined. The numbers, 93 cents versus 51. They take in 1.3 billion extra, and 1.3 billion, you're talking about an 11% beat on revenue over there. Net income for the period, 1.5 billion or 93 cents, compared with a loss of 791 million or 51 cents a year earlier. Not too surprising there. In North America, how about this? Nike's biggest market, sales more than doubled to a record 5.38 billion as the company surged from a year earlier when COVID crushed them, of course. Region sales were up 29% on a two-year basis, staggering. Greater China sales were up just 17%, 1.93 billion. And as they say here, China, typically one of the fastest growing markets for Nike. Consumers in China have threatened a boycott after some Western brands, including Nike, expressed concern about allegations of forced labor in Xinjiang. I just don't get it, folks, in terms of where this goes, right? I mean, China, obviously quite a dictatorship under Xi going on over there. So we'll see how that shakes out in terms of, not surprising, in terms of how that boycott shakes out in terms of people in China. They don't want forced labor making the shoes that they're buying, but nonetheless, the growth is continuing in North America in a big way. And I imagine that things will smooth themselves out in China eventually. Digital sales, as I mentioned, 41% and 147% compared to a normal year of 2019. They're trying to get a membership model, helping fuel its e-commerce business, online purchases from Nike members. So they receive first access to exclusive products, other perks, hit a record $3 billion during the fourth quarter. They have 300 million members globally. That's a crazy statistic, folks. Fiscal 22, how about Nike expecting revenue to grow low double-digit percentage, surpassing $50 billion? Analysts were looking for about 48.5. So as you can see, kind of just beats all across the board. And as they say, so Nike's down coming into this. But as I mentioned, we're going to open at all-time highs, and it's continuing higher at about 153 overnight. All right, now on the flip side of that, FedEx, this one a little interesting. We're seeing it climb back. We made it to about 290 right out of the gate last night. We've been trading at that level for most of the part of the morning. And just since I was getting ready for this, I'm just going to slide over. I mean, FedEx, okay, getting into FedEx numbers here a little bit. Jumping around. There we go. FedEx. So FedEx beat estimates by 2 cents a share. Okay, so really they come in line. They beat technically, but they made $5.01 a share. I think they were estimated about $5 a share, maybe $4.99. So they basically come in line with profits. Revenue topped forecast. Operations are being crimped by an inability to find enough workers. The company will ramp up, here we go, folks, capital spending by 22% this year to deal with delivery delays. That's what's hitting the stock in a big way. When you get capital spending rising that much, the market worried about profits, of course, at a time when they just barely come in line with where the profit estimate was of about $5 a share. Now, what's interesting is I bring that up, right? So there are the numbers, pretty decent numbers in terms of they beat on revenue. They beat on earnings technically. But what I want to pull up here is that they're getting some upgrades this morning, okay? So BMO Capital, they adjust their price target on FedEx to $315 from $305. Now, you came in trading at $303. You're at $293 in the market. Credit Suisse adjusts the price target to $373 from $364. You have Morgan Stanley raising their target to $270 from $265. Stifel maintains a buy, raises their price target to $344 from $339. Raises all across the board here. Okay, so keep it in mind as this goes forward. FedEx, they're in a great position, folks. The world needs deliveries in a big way. You come into COVID about 165. You're trading this morning at about 290. Now, this is a weekly I have up here. All things considered, folks, look where 290 is on this chart. Okay, basically right near all-time highs. We'll put this back on a daily for some context to where we've been. I'm lining up 293 is where we're trading at right now. I got it on the chart, all things considered, pretty much bumping up near all-time highs. You did get up to about 320 on this chart May 27th, about a month ago. This morning, we're technically going to open lower, but I imagine it'd be interesting to see where we open and where that action goes with the type of upgrades we're getting in terms of what they're saying. And, this is like Credit Suisse, right? They're talking about plenty of catalysts for ground margin expansion, keeps outperforming rating, maintains market perform with an upside of 315, just strong across the board for some of the analysts. Now, maybe not what you're looking for in terms of that type of capital expenditure, but here's what I would say in terms of how you're trading. If you're trading super short term on this, you don't want to see capital spending, folks, because you're not going to see the dividends of that capital spending in the future. If you're trading it for the longer term capital expenditure, if you believe in the management of a company and believe in the long-term growth, it's something that you have to do to compete in this environment. I mean, Amazon's building out their own delivery force. They almost already have it in tow. Not surprising that they have to up how much they're spending right now, but in the long term, that's what you have to do to succeed in this business, I imagine. And FedEx succeeding in a big way. Okay, and jumping around to the other stock I was looking at this morning with earnings, we got CarMax. So they're up about $5 on their numbers, giving back a little bit of the gains, but strong numbers for CarMax. Now, this stock had pulled back recently from 138.66. We all know the story with used cars here in terms of the numbers that they've been crushing. CarMax going to open at about 125, give or take. We're trading at about 124.90 right now for CarMax. You get into their numbers in terms of what they have going on. So they better than expected sales and profit. They beat the consensus estimate by $1 a share. So they come in by $2.63. Market was looking for about $1.63. Not surprising, helped by pandemic-induced preference for cars over public transport. I guess that's one thing shaping it, as CNBC puts it. The other part is that they ain't making as many new cars as they used to, folks, when they got chip shortages. And you have a market, anytime you get this much volatility, right? Think about the banks and their bond trading volatility, right? The fixed income trading revenue in the prior quarters. I'm not talking about right now. I'm talking about during the pandemic. It was bonkers. Why was it bonkers? Because there's so much volatility. All right, CarMax, they deal in volume. But you have to imagine that when you have prices so fluid and you have prices rising 7% one month, 10% the next month, there might be a little bit more room for margins in that business than there might have been previously where everything was so tight. But be careful, because this market's going to come back to earth, and used cars are going to be around. But it's been quite a run for CarMax. You back it up to the 3-year weekly. We started off COVID at about 100. Going to be at about 125 today on the open, after being 37 at the lows. Stay tuned, folks. Come back right for the open in 3 minutes.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
Tom O'Brien has just published his 1000th Gold Report. It's amazing to think that Tom has been writing his weekly Gold Report for almost 20 years. To celebrate the 1000th issue of Tom O'Brien's Gold Report, we've just launched a Tiger Dollar sale which runs for 2 weeks only through July 4th weekend. We've doubled all the Tiger Dollar bonuses, where you can now get up to a 40% bonus on your purchase. But that's not all. Inflation is here and the price of the Gold Report is going up after July 4th. Right now, you can lock in the Gold Report at the current pricing of $97 a month for as long as you remain a subscriber. This deal won't come around again. Get your Tiger Dollars today and apply them to the Gold Report before the price goes up on July 5th. Tiger Dollars never expire and are good for any TFNN newsletter or service as a great way to add savings. Head on over to the front page of TFNN.com for all the details and help us celebrate Tom O'Brien's 1000th Gold Report.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open, and we got markets right where we started off. S&P's up 9 points right now at 42.65. NASDAQ 100 up about 25 points. We got the Dow up 185 points. We'll jump over to some of the companies with earnings in terms of Nike and FedEx. Nike holding the highs that it has at 13.7% in the positive. Quite an acceleration for Nike. Now I'm going to jump over to the Market Watch tab and pull up the Dow Jones. Is that what I'm talking about? Yes, it sure is. Dow 30, right? Yes, it sure is. And where am I on Nike? Where am I? There. Excuse me, FedEx? I'm totally lost. Maybe that just hasn't updated yet as we open. Not sure it has. Yeah, because you got Nike still at 133.60. Maybe it takes a second for that heat map to update. We'll jump to the S&P. All right, we'll jump around. Maybe it takes a second for that heat map to update. But nonetheless, I was going to pull up what the impact in terms of Nike having on those markets. But we get the S&P right now up about 8 points and the Dow up 186. And as we mentioned, we'll jump. Nike shares holding 13.7% down. FedEx shares trading lower on the open, down about 4% right now. CarMax with their numbers this morning, holding up about 5.2%. All right, what else we got? We got the stress test last night for the banks, right? Checking out how the banks are trading. JP Morgan, we're flat. Pretty much the market, in my estimation, knew that these banks were going to be just fine. Citi, giving back the gains it had as well, down about 0.2%. Bank of America, holding on to the gains, up about 0.8%. So you had the banks easily clear stress test, setting the stage for payouts. So it looks like Monday, after the close, we'll get announcements here at about 4:30. Lenders can announce their plans for distributing capital after the market closes on June 28th, and the industry's strong results mean payouts may be largest ever following the Fed's annual exams. Early estimates indicate the 6 biggest banks, so you get JP Morgan, Bank of America, Citi, could return more than $140 billion with a B dollars to shareholders. Yeah, pretty much all but expected in terms of how they're trading this morning. Interesting. Bank of America giving it back a little bit. But guess what, folks? Let's put it on a daily. All right. And I say guess what, as in you back it up to November. Bank of America. Folks, banks don't usually trade like this, all right? Bank of America trades from 23 to 43 in the period of 6 or 7 months, okay, as the market materially realizes that, number one, interest rates rose from about 0.5% to 1.5%, okay? And you also had an area that banks were short up. The economy was short up. We got tremendous stimulus passed in that time under the Biden administration. 43, 49. So basically all things priced into this as Bank of America continued to bring it up. Pretty interesting when it's always, what, buy the rumor, sell the news, right? You could have bought it up until they passed that last night, but boy, if you had to wait for the open, you're actually seeing negative prices on that news. JP Morgan down about 0.2%, but same thing. You just had JP Morgan, one of the strongest banks on Wall Street, trade from 100 up to 167. Crazy action. Bank of America. Yeah, we just went over 23 to 43. But Citi, trading from about 40 to 80, a double banger in completion. Citi's down 1.3% on this number. So we are seeing a little bit of a story of buying the rumor, selling the news, as they're all trading a bit back. Let's see how Wells Fargo is trading as well. Wells Fargo up about 0.4% on that bank news. All right, what else we got? Virgin Galactic. They're going to be flying in space, and the stock's flying today, up 21% to $48. Quite the turnaround on this stock, folks. It didn't take long. Given a month and a half, and you go from $14 to almost $50, you're going to be talking about pushing the highs of 62.80, and that having to do with Virgin Galactic. They get the green light. I think I got it up here. Where are we? No, maybe it's just in the stocks making moves I had up here. Here it is. Come on. Where am I? I know you're up here. There it is, Virgin Galactic. So they got approval from the FAA to begin flying paying customers into space. The first such approval granted by the FAA, and follows a successful test flight by Virgin Galactic last month. I mean, space travel's here, folks. Pretty remarkable when you look at it, but Virgin Galactic. Now, right now, you jump over to the Analyze tab, you get into the Fundamental tab underneath, and you're talking about a company valued at about $11.5 billion as they go into space travel. It's coming, folks. Tourism on space, it is here. Okay, what else we got going on? Jumping around to some of the headlines of the stocks that are making moves. We've covered Nike, CarMax, Space, Virgin Galactic, FedEx, Tesla. So Panasonic sold their entire stake in Tesla for about $3.6 billion during the most recent fiscal year. according to a spokesperson. They were an early investor in Tesla, major battery supplier for the automaker. They used that money for another acquisition, I think I heard this morning. Nonetheless, they are out of Tesla. Can't blame them for the type of valuations that they got on Tesla. Jumping over to Tesla shares this morning. Tesla trading up about 1.7%. You made it as high as $900. You were back down to a price point of about $560, $550. Yeah, $546 technically, the lows. Since then, catching a little bit of a bounce to $691. That next high that we'll be coming into, you do have a high volume high up here from April. You're talking about $780 on Tesla shares as it climbs to that level. Let's see, what else we got? BlackBerry, some news. We talked about the banks. Yeah, Credit Suisse, interesting here. Mulling various overhaul plans, including a possible merger with UBS, according to people familiar with the banking. Credit Suisse a little bit higher this morning on that news. And what else we got going on, jumping around? So we got infrastructure deal out there as well. You know, one story that caught my eye a little bit this morning from CNBC. Big Oil's increasing number of climate lawsuits draws parallels to big tobacco. Haven't even read this article yet, right? I'm a huge proponent of clean energy, solar energy, getting off of oil if you can, okay? But the other side of that, folks, is that we need oil right now still. We're not even close to there, okay? And when you start comparing oil to selling cigarettes, it's not comparable. And these big oil companies, don't even get me started, right? You got BP, British Petroleum spilling God knows how many millions of barrels of oil into the sea and all this stuff that happens, okay? So they're not worrying about the climate. They're worrying about themselves, all that stuff. But it's not the same thing as companies that have been pushing cigarettes to people, okay? You don't need cigarettes to live, folks, okay? We need oil still to live and function as a society. We definitely needed it over the past 20 or 30 years. So when I see articles like this, okay, you know, and you got oil rocking and rolling to the tune of $74 a barrel from $33 a barrel, all right, you're not going to see these oil companies get clobbered to the tune of like cigarette companies, and cigarette companies are still around after everything going on. You know, I mean, just it's tantalizing headlines, all right? It's clickbait in a big way, but I don't think it does a service when you talk about a service to investors, talking about the conversation, because there's nothing comparable to oil companies drilling oil, which is so necessary for almost every part of our economy still, to comparing it to big tobacco, which was basically just lying about selling cigarettes to people, telling them it was healthy, and meanwhile, they were just killing themselves. So don't think that's a fair comparison. I think it does a disservice to the conversation going on about clean energy, et cetera, even though I have no patience for big oil at all, but they are not comparable to big tobacco in any way. We'll leave it at that. All right, what else we got going on? Let's jump around a little bit. We jump from Tesla. One of their competitors coming out, I'm sure at some point, Pony.ai. So they got a JP Morgan execs, and they got a good one. Currently, the vice chairman of investment banking, quite a position at JP Morgan. He's going to be this company's first CFO. So the startup has operations in U.S. and China. They're going to help the company commercial growth and global development. And as they say, anytime you hire a big CFO, maybe it's hinting to a IPO down the road, but remarkable, folks. It's coming. We got space travel going on this morning. And self-driving cars. My dad was talking about it yesterday. They're on the way, folks. Sooner than we all think. Stay tuned. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We're 12 minutes into trading for the day. We got markets right where we were at the start of trading right now. You get the S&P's up 8 points, NASDAQ 100 up 25, the Dow up about 138 points right now. Got a great question in the YouTube Tigers Den over here talking about when you talk about channels, do you use the wick or the body? No, to our man Paul Rolfs out there talking about maybe potentially using the body. For all intents and purposes, so I have a chart here of the S&P up, okay? Now, folks, I say it all the time. My dad says it all the time. Many people say it all the time. Technical analysis is an art, not a science. If it was an exact science, okay, then we could write it down into formulas, put it out. There'd be no interpretation whatsoever. You would know the exact calculation, as you do in mathematics and science, on how to do something. Not exactly how it lines up sometimes, right? So, for example, got a chart of the S&P up here, okay? Started this trend line on the run from November 30th, right? We start getting the efficacy data for the vaccines. The market takes off to the upside. We all realize that the future is bright. We are going to get some vaccines with some pretty tremendous upside in terms of the efficacy, and the market accelerates higher. Now, this trend line channel, okay, in terms of where you match it up, you could, and as you see, I'm kind of using the bodies here as well, okay? But again, it's an art, not a science, folks. Linear regression is what I try and do in my own head in terms of if you're familiar with it, right? You're matching the area that best fits the curve, essentially, okay? And that's going to take some interpretation of where it best fits the curve. Okay, if you have one crazy tail out or something like that, all right, you're not going to need to give as much weighting. If there's one crazy tail, maybe things exacerbated for a few minutes, the market pulled back, all right? Maybe this was a case of it in terms of the Friday and the Monday. You see the acceleration we got on the S&Ps. I was talking about it as it was happening last Friday. 1 week ago, I was talking about it on the show, saying, hey, we're breaking below this trend channel line here, okay? It'll be interesting to see if it holds, if it gets back to in that trend channel line. And I'd say we got back in there with force, folks. And if we ever hit the top side of that trend channel line, we're talking about 4,400. Now, what's so cool about this, okay? The trend line going back to that run from November, I mean, this is just a great channel, folks. I mean, look at how these tops line up, okay? You go back to the top, we have October 13th. Just skipping across the top line, right? We trade lower on February 1st. We make it to a low of 36.56. Don't quite get down to that level, okay? But what do? We trade back down to the level. Really, the first time that I build this trend channel, okay, when, you take two different points and I line them up, and it's a parallel line, to the top part of that trend channel line, which I love as well. Okay, we make it down to that level on March 4th. We test the channel line, I would say, back there on March 25th. You come down and touch that area on May 13th, touch it on May 19th, and we just peaked below it on June last Friday. Now, the cool part is, if we back this out to go a little bit further, okay, now I backed it out on a daily. We're going to back it up so you can see the entire COVID collapse from February of 2020. What I'm going to do is, on the Thinkorswim platform, I'm going to extend those lines to the left just to see how they match up. And what I think is so cool is that it's still holding. You're almost still holding. Now, there's where it gets a little bit of interpretation here, okay? Not quite as clean in any way. All right, and this is where do you line them up, all right? That's not as clean of a trend channel line at all. But guess what? It ain't that far away either, okay? Yeah, we got above that line maybe here. Maybe we got above that line back in August as things started to accelerate before pulling back. But as you can see, we skipped across that area a couple times. And if you match up the low to the low to the low to the low, where does it bring us? It brings us to the lows of COVID, which is pretty cool overall. So I'm always interpreting different things. If you have a bunch of different tails that are all lining up and maybe the tails aren't as long, then I might give them more credibility. But if you got one crazy tail that's sticking out, maybe that's not something that you want to lend credibility to if it's just one market getting away from itself very quickly. So think about that in a fundamental aspect as well. It should make sense, folks. I use charts to make sense of somewhat of a more fundamental grasp of things, right? Show me the general scope of where the market is trending, okay? It doesn't have to be exact, but man, it's pretty remarkable when you look at where we've been, when you back things up. And as I said, perfect trend channel line when you go back to the run that we started from on November 30th, but really interesting when you back it out that it matches up to the lows that we had on COVID back there on March, what is the low? March 20th? What's that low? What do we got? My birthday. How about it? March 20th. I should have been taking all my birthday presents, buying some stocks. That's what I should have been doing. March 20th, my birthday. Is it the 23rd? Let me zoom it in. 23rd is technically the low. Okay. Yeah, my birthday was on a Friday. The whole world was shutting down back then, March 20th of 2020, and the lows made on Monday, and right then they took off in a big way. And I remember having conversations at that time, folks. I'm sure I wasn't the only one. I was trying to encourage people who are in the market in any capacity in terms of not professionals, saying, hey, if you have money on the sidelines in retirement and the S&Ps, let's put it back on a daily to see the exact correlation of a 5-year, right? S&Ps are pushing 2,200, folks, down from 3,600. Okay, what's the exact high? 33.97, I think. What are we at? Yeah, 3,400. Excuse me, 33.97 is the high. 33.97.50 to be exact. You trade down 2,200. I remember saying, just buy some good companies and hold them for a few years and be fine. And hindsight, of course, 2020. But man, anytime you got powder dry in terms of you had capital in the market at a time when everybody was forced to sell because of whether it's margin, whatever it is, right? Fear taking over since then. I mean, just legendary stuff. You're talking about double bangers since then. We make a low of 21.74. And folks, you're going to be pushing. What do we got to get to? 43.50 for a double banger from the lows in the span of basically 15 months? Remarkable action. All right, what else we got going on at TFNN? We got a couple sales, folks, running through July 4th weekend. July 4th weekend's coming up next week. Remarkable. Gold report, my dad, tremendous. 1,000th gold report put out this week on Monday. Congrats to him. Just 20 years almost, folks, that he's been pushing out that gold report. Tremendous record over that time in terms of what gold has done. Let's take a quick look at gold, right? Gold, we're up a little bit today, up about $11. I'm going to just take that off real quick so it doesn't remove that drawing, skew things. Is this going to push us all the way back here? Yes, it sure is. So we're talking about 20 years ago. We're talking about almost 2002. He was kicking it off. I think we had 252. Can I find it on the chart? 252 anywhere? Somewhere down here, folks, is where he began that gold report. And kudos to him. I remember him talking about it. I remember him talking about that he thought gold had a great run happening. And just look at where it went, folks. From 2001, you traded at 250 and change, quite a rocket ship up to the highs we had back there, pushing almost $2,000. And then you want to talk about the pullbacks of all pullbacks, right? But look where we go, 50%. How about it? And then we take off to the upside yet again. But what do we have going on? So we got a Tiger Dollar sale. Right now, you can get up to a 40% bonus. If you're not familiar, Tiger Dollars, I encourage anybody who's a current subscriber out there, go take advantage of the Tiger Dollar sale. You can apply that immediately to your account and they'll automatically be used for all future transactions. You add automatic savings to your current subscriptions going forward. Okay? If you're new to TFNN, they never expire. You can use them for any newsletter, any service, any of the trading courses we've done. Larry's done some great live trading courses. I mean, even jumping over to the services, folks. All right, you get down. We get the live trading courses still up here that you can attend the archive. All of those you can use Tiger Dollars for. So please come over, check it out, go over the details, the front page of TFNN. You can see you have 3 options you can purchase Tiger Dollars, whether it's 500, 1,000 or 1,500, you get up to a 600 Tiger Dollar bonus, receiving 2,100 on the top end there. And what else we got? Inflation, folks. It's going up. Gold report price is going up. Last chance to lock in prices until July 4th weekend. And I'm going to go over that one a little bit more when we come back. You can lock in the monthly, the 6-month, or the yearly. Still get a 30-day money-back guarantee on that Gold Report subscription. Check it out. Page of TFNN. Be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps up about 8 points right now. Pretty tame action so far. This might be what we see for the day, folks. We got a VIX right now, 1576 as we come into the weekend. We got a long weekend next weekend coming up for July 4th. We'll be closed the 5th of July for that July 4th holiday. Jumping back to the sale on the front page of TFNN. So I talked about the Tiger Dollar sale, folks. Both these sales running through next weekend. And you get the Gold Report sale. What I was talking about is you can subscribe, whether it's for the month, the 6-month, or the yearly rate. Okay, you lock them in all for as long as you remain a subscriber. We kind of don't do these deals in terms of, we don't do deals where we'll allow people to lock in a rate for as long as they're a subscriber under the rate. Once you go up, though, we always keep people grandfathered into the rate that they're paying for current customers, so you have a chance to lock these rates in. I encourage you, if you're thinking about staying on, think about signing up for the 6 month or the year. You can go over, you can purchase Tiger dollars, you can sign up for a 6 month or for a year. You lock that in for as long as you remain a subscriber. And if you're not satisfied, you still get a 30-day money-back guarantee. If you pay via Tiger dollars, you'll just get those Tiger dollars refunded. You can use them again for any newsletter or service at TFNN that we offer. All right, jumping back, let's take a look at some of the stocks that were moving on the open. FedEx continuing to drop, down about 5% at 287.82 on their numbers last night. On the flip side of that, Nike continuing to run higher, up 14.4% to 152.86. We'll finish it up with CarMax. CarMax continuing 6.2% to the upside on their numbers. We got the tech stocks creeping into the red right now. Let's jump around to some of those FANG stocks as the NASDAQ gives it up a bit. We got Amazon shares trading lower by 1%. From $35.24 yesterday, we're down $110 from Amazon on yesterday's open as they drop a bit. Microsoft shares, let's check it out, down about 0.25%. We got Apple shares down, we'll call it flat for Apple. Facebook shares down about 0.2%. Netflix shares positive. Netflix got an upgrade, I believe, today, up at about $529. And we'll jump to that NASDAQ 100. A little bit of a pullback right now. You're only down 9 points, though, all things considered, in that NASDAQ. All right, folks, stay tuned. We're going to have Basil Chapman. He's coming up next with the Tiger Technicians Hour. Fast Market by the TD Ameritrade Network. Kevin Hinks, Alex Coffey, and the team coming up at 11. Our man Larry Pesavento live. Trade what you see at noon Eastern time. Steve Rhodes at 1 o'clock. Dave White at 2 o'clock. Tom O'Brien. My dad wraps it up at 3 o'clock. Live programming all Friday at TFNN. Thanks so much for tuning in, folks. Enjoy your day. Stay tuned. Basil Chapman coming up next.